Well, at this point we've got really a couple of different options. One is the Little Dipper, and remember the Little Dipper, and I'll show you the process that I've described several times. The process is as simple as attaching the Fibonacci to the high and then the low of this bar, and just waiting for the market to come up here to the 618 retracement level, which is 319. In order to go short. Now, if the market bounces up to 319, that's where we will then go down to a 15-minute bar and talk about some of the entries there. But so far, this is the setup. Okay, we've identified a resistance area based on the weekly bar. That's this triangle here. And if you haven't had a chance to, you can go check out the weekly wrap-up. I posted that a little bit later this week, but check out the weekly wrap where I talk about where I got these levels from. So we've identified the resistance, we've identified the triple top. I can see that there's a big volume spike that came in right here. So this bar that the black line is on, big volume spike, was a narrow range. Now we're waiting for a Little Dipper. If you've gone through the advanced tactics, then you'll know I talk about a couple of other methods that are very similar to the Little Dipper. And basically, once the market moves back up, we start looking for the market beginning to close up on low volume. And let me show you what I mean. Let's go back over here. And you see here that there was another volume spike on this bar. And then 2 hours later, the market closed higher, but the volume was lower. Okay, you can see this here. Okay, so the volume was down. The market closed up. Another pattern which I talk about in the advanced tactics is this pro move here, where they're catching the stops. And again, I talk about this on the weekly wrap-up video. But basically, what happens here is the volume moves, or the price moves up on high volume. It tries to move up again. The volume is lower, and then it tries to move up a final time, usually above these areas here, triggering stops in this area, or drawing people in long in this area, and then closing down. Usually after you see this combination, high volume, lower volume closing up, pro move, you'll see the market drop off fairly rapidly. So this is the sequence of events that would be the ideal, and we may see a variety of that over here in the coming markets. Go ahead and move back over here. So what I'll do is, I'll throw out some more of these videos today. This position may or may not even turn out today. This thing might actually just come up and come right back down. Who knows? We're going to have to wait to see. But that's, one of the things about trading, of being patient, again, not getting drawn in and getting sucked into this trade, especially after it's come off of this high so quickly.